Hey, what's going on, guys? Leo. So I want to take a look at an article that Cathie Wood from ARK Invest had put out. This is going back to 2022, but she lays out a prediction for Ethereum that's extremely interesting and extremely bullish. And so we're going to look at that, and then we're going to compare it to the actual chart, just do a little bit of technical analysis and see what would her scenario look like if it were to play out. So let's go ahead and dive in here. So Cathie Wood says Ethereum will reach a $20 trillion market cap by 2030. We scroll down to the article, goes on to say that each coin would be priced at around $170,000 to $180,000 based on its current price of call it $2,500. So it's interesting. So the next sentence here, is quite interesting. So it says, as financial services move on chain, decentralized networks are likely to take share from existing financial intermediaries. Interesting. So how does that compare to the current environment that we're in right now? Well, we have the president of the United States that is extremely bullish on crypto in general. He's wanting it to be adopted. His comments exactly are that he wants it to be the crypto capital of the world, being America. BlackRock, the largest asset manager in the world, says that they want to rapidly tokenize stocks and bonds. And then BlackRock had also stated that Ethereum is the default choice for institutions for stablecoin adoption, decentralized finance, and real-world asset tokenization. So if her scenario is going to play out, the kind of the macro fundamentals of what we're seeing talked about, it's being played out right now from a fundamental perspective. We've seen David Sachs, the crypto czar, as he's called, say that they're going to create trillions in demand for U.S. treasuries by using stablecoins. So all of the pieces to the puzzle are there for Cathie Wood's thesis to actually come true. So now let's take a look at the chart and see if we can actually get there. So first chart I want to show you is the Ethereum to Bitcoin chart. Now, this is interesting. So we see this pattern here where it is trending sideways over time, right? So we have this sideways trending channel. This is just like congestion to me. So the top side of the channel is where we peak out during the bull runs, and the bull runs are caused by global liquidity increasing. So if you look at the chart, you have the red line here. That's going to be global liquidity rising. And then the blue line is going to be your 100 period DEMA. And so whenever it crosses above, you'll note that Ethereum gains against Bitcoin because we're in a really good liquidity environment. And then this whole time that we've been bleeding out and people have been saying excuses for Ethereum, saying, oh, it's this reason that's causing it to go down. No, it's the transaction fees. No, it's this. It's the way that Vitalik dresses. It's all this ridiculous stuff that people are coming up with, trying to come up with some reason why Ethereum's not performing very well. But the reality is that it's just global liquidity getting tighter and tighter and tighter. But now we've crossed above and global liquidity is beginning to rise. So what that means is that it's very likely we are going to start seeing a reversal, and we're going to see the ETHBTC ratio kind of go something like that. That's I don't know that I've ever seen really price action move that way, but it'll trend back to the 0.08 level. So I would say anywhere from 0.08 to 0.05 is where I would expect us to peak out here in this global liquidity cycle. Now, this green line here, this is showing how long I think the global liquidity cycle will last. It's usually about 700 days from the point that it crosses. So just projecting that out, that means that the bull run will likely end December 2026, January 2027-ish timeframe. So now that we have an idea of where the ETHBTC ratio should be at the top of this bull run, let's take a look at the Bitcoin chart and see what it looks like it's going to do. So again, we're seeing global adoption, countries talking about adding Bitcoin into their global reserves. And what you'll notice is we have this long-term trend line here, trend channel, and it's looking very, very similar to the 2016-2017 bull run, which is one of the strongest bull runs. This is back in the ICO craze. So what you'll notice that's very similar is that we're kind of trending along the bottom boundary of this long-term trend channel, and we're doing the exact same thing today, just trending higher. And so what I expect to happen is that as we move forward, eventually we get into a parabolic phase, and we get up here to the upper bounds of this trend channel, which would put it anywhere from 1 million to like 1.5 million around the January 2027 timeframe. So, and I can show you all also the global liquidity on here as well. So I'm going to have to go down to the 1 week chart. Okay, so you can see here as well how the global liquidity cycle is what drives the Bitcoin cycle. So you can see here where global liquidity spiked up and then Bitcoin's off to the races. Going back to the 2016 cycle, same thing. Global liquidity spikes and then Bitcoin's off to the races. Global liquidity is spiking right now and we're off to the races. So I expect that this is going to be turning around. We'll be grinding higher and then eventually we're going to have that parabolic phase. So now let's take a look at Ethereum because that's what y'all are here for. So we have this long-term trend channel going back to 2017 for Ethereum. And you'll notice that the prior bull run, we didn't quite get to the high, but you'll notice that this period from 2022 June, I believe that was the FTX collapse, we kind of grinded sideways along this parallel for the trend channel, and then we kind of broke down here and we've come down to the lower side of it. So if we're going to see Cathie Wood's scenario play out, I don't think we get to 160 or 180, but I think that 80K is certainly on the table in this hyper bullish supercycle type of environment. So, and the reason for that is, well, for one, the technical analysis on the chart, it matches. It's possible that we get there just because we're up at the top side of this trend boundary. But if we see a $1 million Bitcoin at this same point and then go back to the ETHBTC ratio chart, well, what is 1 million times 0.08? Well, it's 80,000. So it lines up with this chart for Ethereum. So again, if this hyper bullish scenario plays out, end of this year, we would be 6,000-ish, 5,000-ish, probably retesting the highs. And then in 2026, as we get rate cuts coming in more, I would expect this thing to really take off and we would start moving higher. At a minimum, I'm thinking 20 to 30,000 for this global liquidity cycle. But if we do get this hyper bullish scenario, and there's quite a bit of technical analysis that's just pinpointing this area. For example, if we just make a 100% move from the last bull run projected from where we are, that gets you to 80,000. The trend channel gets you to 80,000. The ETHBTC ratio gets you to 80,000, right? Assuming that Bitcoin gets to the $1 million or a little bit above price target. Even if, for example, if like Bitcoin gets up to like 1.2, 1.5 million, in some really crazy situation, we wouldn't even need to get to the top of this channel. We could be somewhere lower at like 0.06 and still hit that $70,000-$80,000 price target. And now, I know a lot of people are probably thinking, oh, that's a crazy, crazy target. But going back to what BlackRock and everybody's talking about, they're talking about trillions of assets, stocks and bonds being tokenized, Ethereum being the default choice. Well, the stock and bond market's like $100 trillion in the United States. M2 money supply, I believe, I want to say it's something like, I want to say 20 trillion, but I might be wrong on that. No, I'm pretty sure it's 22 trillion, somewhere around there. So you're talking about a ridiculous amount of money that they want to rapidly, their words, rapidly tokenize onto Ethereum. So, the fundamentals are there. I know that it seems absolutely crazy. I don't know if we get it, but everything there, everything lines up that it could play out. So a little bit of optimism in the endless negativity on Twitter. That's another thing that's really interesting to me about Ethereum is that it's the most hated asset I've ever seen in crypto. Everybody practically is just trashing on it. And then they make up, well, it could maybe go to 7,000 or 10,000. I'm just sitting here thinking to myself, what? Why is to me, it's just odd that everybody on crypto Twitter is attacking it so relentlessly and they're so bearish on it. And then very quietly, you have these massive institutions like Fidelity, we talked about yesterday, Fidelity's hiring Ethereum developers, or you have like BlackRock saying that Ethereum is the default choice for, stablecoins, DeFi, tokenization. And then everybody on crypto Twitter and everybody else is hating on it. So I really feel like it's built up since 2021, just this massive consolidation. And as soon as it starts to rip, I feel like all these people that have been kind of giving it a hard time are just going to pile in and FOMO so hard, and it's just going to fuel this thing to go higher. So something to keep your eye on. Let's go ahead and move on. So it looks like JP Morgan, CEO of, he's urging the U.S. to engage with China to end this tariff war. Seems like, it doesn't seem like we've made any progress with China. They've seemed to be certainly putting up a fight. We'll say that. So JP Morgan says there's very little stress in the consumer level. Now, I don't know about that. I talked to some friends and whatnot, and there are people that are, they feel the higher prices. They feel how expensive everything has gotten in life over the last few years. So, I don't really believe JP Morgan there. So China says the United States' extremely shameless tariff war will backfire soon. So, there's a lot of propaganda coming out of China, them saying, their opinions about what's going on. I think we get I think we get some sort of trade settlement here within the next couple of months, probably before June. I don't see this dragging on. So European Union expects that U.S. tariffs to remain in place as negotiations stall. Again, we're just getting some negativity coming out with the whole trade situation going on. My take is that there's a 90-day pause, especially like European Union, not so much with China, but there's a 90-day pause right now for these negotiations, and these are tactics to put public pressure on whatever negotiations are taking place. So it's really hard to kind of gauge what any of this actually means. It could just be, cheerleading to put pressure and try to move things into someone else's favor. So it's really hard to kind of come up with an opinion of it. But I would say that, there's still 90 days to get this negotiation situation settled. It's still really early. So I don't think that this is anything to be super scared of yet. So I think that pretty much wraps up today's video. If y'all have any questions, leave them in the comments down below. And until next time, I'll talk to y'all soon.